Here's the question I get asked all the time. If I bought my first home in Victoria using first homeowners grant, can I rent out one of the rooms to make a bit of extra cash, but also not exposing myself to capital gains tax? Now, with mortgage repayments, rates, bills going up, it's a super common idea. Turn that into a spare bedroom and a side income basically starts flowing. But here is where it gets really tricky. Can you actually do it without breaking the rules or losing your grant? So today, I'm going to break down exactly what's allowed, what can and can't you claim, and what are the tax and legal consequences that look alike in all the simple terms. Now, before we go further, a very quick disclaimer. This video is not financial advice, not tax advice, not legal advice. It's for educational purposes only. Everyone's situation is completely different, so please chat with your accountant, your financial advisor, your financial planner, your property lawyer, your property advisor before making any further decisions. Now, let's imagine this. You've just bought your first home in Victoria and you've used the first homeowners grant, maybe received, some stamp duty concessions, a first home buyer's grant, and you've literally moved in. But after a few months, the reality hits in. The mortgage repayments, the bills, the maintenance, the council rates, the insurances, the costs, they all add up. And so you thought you're just replacing rent with mortgage, but that's not really the case. And so you start thinking, what if I can rent one of these spare bedrooms to a friend or maybe even list it on Flatmates? It sounds really smart, right? The extra cash flow, a bit of company, and your home doesn't feel so empty. But does that break the first homeowners grant conditions? And more importantly, does it affect your tax or capital gains exemptions later? Because technically your principal place of residence has capital gains exemption. You never pay capital gains when you're selling these properties. So let's unpack all of this. What is allowed in Australia and in Victoria? So the good news is, yes, in Victoria, you can rent out a room in your own home, even if you have used your first home buyer's grant or received the stamp duty concession. Now, there are certain conditions, of course, that you have to meet. So the key condition is this: you must be living in the property as your main principal place of residence. As long as it's genuinely your home and your name is on the utility bills, your mail comes in there, you sleep there, you are meeting the main residence test. But there is one more important detail. The 12-month rule still applies. That doesn't mean that you don't have to live there for 12 months. That means that you need to live in the property for at least continuous 12 months within the first year after you've purchased it. So, for example, if you buy the house in January and move in by March, you need to keep living there until at least the following March to satisfy the first homeowner's grant and the concession requirements. You can rent out a spare bedroom during that period, no problem, as long as you are living there. If you move out entirely and rent out the whole property to someone else within that 12 months, that's when you will likely breach the first homeowner's grant conditions and potentially have to repay the grant or lose your stamp duty benefit. All right, let's talk money, the financial implications, because this is where most people get caught and this is where it gets really interesting and exciting. When you rent out room, the income that you receive is technically taxable. So even if it's your mate from work or your cousin staying with you, and if they are paying you rent, that's income. And the ATO expects you to declare it in your tax return. So if your friend is, say, paying you $250 a week, that's $13,000 a year, and you'll need to include that into your tax return. But here's the flip side. You can also claim a portion of your expenses, like interest on loans, utilities or maintenance costs, and the proportional part of the house that is being tenanted. For example, if your tenant room is 20% of your total home floor space area, you could potentially claim 20% of eligible expenses as deductions. And that sounds great, right? Well, here's the catch. Once you start claiming deductions on your property, which is your principal place of residence, it's considered partially income producing. That's where the strategy matters. If you don't claim any deductions for the rented space in your tax returns, even though you're receiving rent, you can potentially avoid triggering the capital gains tax issue later. The ATO generally won't consider it income producing if you're not claiming it in your tax returns. And there is another layer. If you're renting to a family member, let's say your mom and dad or your cousin or your brother or your parent, the arrangement is completely informal. So no written lease, no commercial rent, then there is no capital gains implications either. It's not even considered as an asset test under Service Australia rulings because it's not seen as a commercial or an investment arrangement. It's just a family sharing home. Now the legal stuff. Now let's touch on the legal side, because even if it's your own home, tenancy laws can still apply. If your friend is paying rent and has a lockable room, you might actually be creating a tenancy arrangement instead of a boarding house arrangement under the Residential Tenancy Act in Victoria. That means that the person renting the room would have tenant rights attached to it, including notice periods, bond protections, and the conditions around minimum rental standards, the rental increases, the evictions, etc., all of those things. So it's always best to have something in writing, even if it's informal. It doesn't need to be like a 20-page legal document, but at least a simple rooming agreement that outlines all of these things as to how much rent are they paying, how can they leave the property, what the rental increases are going to look like, etc. Now, if you're renting to more than one person, like 2 or 3 unrelated flatmates, then the property might even be classified as a rooming house under Victorian laws. That comes with extra obligations like registration for rooming houses and safety standards and compliance checks. So if you are planning to rent out multiple rooms, definitely check with Consumer Affairs Victoria or your local council to confirm if you need to register as a roaming house operator. Also remember, your home insurance might need to be updated too. You might not be covered by a traditional insurance. If someone else is living in your home as a tenant or paying guest, your policy might need to reflect that, otherwise claims could be denied in that case of damage or a liability issue. So what's the smartest way to go about this? Let's break it down into a few practical tips. Number 1, live there for at least 12 continuous months. That keeps your first home owner's grant and stamp duty concession safe and intact. Number 2, be honest with ATO. You can't go around. If you're receiving rent, declare it. Trying to hide income can backfire, especially if your bank statements or digital transfers shows the rent amount coming in. Number 3, think long-term about capital gains. If you plan to sell your home in the future and this is not your forever home, you want to keep it fully CGT-free. So consider not claiming rental deductions on your tax returns. Sometimes it's worth even giving up a small annual tax benefit to save a larger CGT bill later. So in summary, yes, if you are living in your property as your main residence in Victoria, you can rent out rooms and collect the rent. You'll still meet the first homeowner's grant and the stamp duty concessions as long as you live there for 12 continuous months with the first year of purchase, and you can still get the rental income, and that doesn't nullify or void the first home buyer's grant or breaches it. You'll need to declare the rental income, of course, in your tax returns, but you can avoid the capital gains tax implications by doing the things that we've discussed as part of the property. At the end of the day, renting out a spare room can be a smart financial move, helping you pay down your mortgage a lot more faster. It would help you manage your cost of living. It would help you, maintain your lifestyle and build a bit of a buffer as long as you do it the right way. If you found this breakdown helpful, give this video a thumbs up and hit subscribe for more Australian property insights simplified and in a practical fashion. Remember, this isn't financial advice, but smart knowledge. Thank you for listening to me today. Take care, stay safe, keep smiling, keep investing. This is Moss checking out. Adios.